Well, we have seen a trigger by the bullion sell-off in the international markets and overall negative sentiment for many of these commodities across board. And iron ore prices also have declined from its recent highs by more than 6% in last 10 days. So it's not just the non-ferrous metals, but the ferrous metals also have been declining. And what is the outlook going forward? For that, let's go across to Praveen Kumar. He's Chairman Maya Iron Ore, and he joins us on a Dubai phone line. Praveen, hi, welcome to the show. There has been a sharp decline in case of iron ore prices in last 10 days. How do you see this decline, and what are the factors that you see going forward for the commodity?
Thank you, Manisha. Currently, the Chinese market is on holiday till 7th. So the market is not having a direction as of now. But triggered by the bullion sell-off, the iron ore prices had sharply fallen down, and the Chinese steel makers and the traders expect the market to further correct to 170 levels to 160 level for the Indian high grade. And the Indian high grade ideally should have crossed the $200 mark, because the month of September had seen the price to 190 levels, and the supply from the Indian side is extremely short. And the Indian government measures of hiking the export duty and also the recent export bill is definitely going to affect the Indian exporters negatively. And these factors should have brought up the prices to $200 mark. But the sentiments across the globe for the global commodities have gone on to the negative side, and I know prices also are in line with that, and the prices can correct to 170s or 160s levels if the financial market does not stabilize.
Praveen, how do you look at the Chinese demand? Would you think that they would come back into the markets at these lower prices? 60% down in 10 days is quite a bit.
No, actually, the Chinese demand for the iron ore, definitely it won't come down. It will keep up its pace. But what is happening is the Indian iron ore prices, iron ore supply is losing its ground in the Chinese market, because they normally plan their entire year's shipment based upon the supplies available from Brazil, India, and Australia. And India was enjoying around 27% of Chinese market share. But currently, because of this uncertain supplies from Karnataka, Orissa, and Goa, they have actually ventured to different countries like South Africa, Chile, and all those places. If you see in many of the Chinese ports, year on year, the dependency in Indian iron ore has gone down to even 10%. So if this continues, the Indian exporters are going to suffer a huge revenue loss, and the dependency is going to go down. The iron ore demand from China is not going to come down. So our Indian government should definitely take some swift measures to support the Indian exporters.
All right, Praveen, we get you. Thank you so much for joining us and giving us your view on iron ore prices. So yes, the prices have declined, but the China would buy from the lower levels. The loss, of course, would be for the Indian producers and exporters. Let's also go across to Naveen Mathur. He's